How do you know exactly which pin bar pattern to trade? Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable pin bar Fibonacci retracement trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. And don't forget to share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Pin bar candlestick pattern. The easiest trading strategy that every trader must know. Trading pin bar signals with support and resistance confirmation is perhaps one of the most effective ways to trade Forex and stock, if not the most effective way to trade. This video will show some examples of trading pin bars from key levels. Follow along closely, because this is likely to be one of the most powerful Forex and stock trading strategies you will ever learn. At the end of this video, you will understand what the pin bar is, how to identify the best ones, and how to use them to trade successfully. And now, what is a pin bar? Pin bars are one of the most valuable tools that price action traders have in their trading arsenal. They often form at major market turning points, correction levels, or within a trend as continuation signals. When combined with a strong support or resistance level, pin bars can be one of the most accurate trading signals available. The best pin bar setups occur near confluent levels of previous price action as the market moves in one direction and then regresses back to retest a previous support or resistance level. We can see in this daily chart of Euros United States dollar two successive pin bars testing a previous support and resistance level and then resuming downward movement. The actual pin bar itself is a bar with a long upper or lower tail and a much smaller body. You can find pin bars on any naked bar chart or candlestick chart. We use candlestick charts because they show the price action the clearest and are the most popular charts amongst professional traders. Many traders prefer the candlestick version over standard bar charts because it is generally regarded as a better visual representation of price action. Pin bar structure. Pin bars occur in all market conditions, uptrends, downtrends, and range bound. The beauty of price action analysis is that it teaches you how to analyze market movement based on inherently generated data, namely price data. So let's understand a bearish pin bar and how it formed. Phase 1. After a strong extended uptrend has been in effect, the atmosphere is bullish. Phase 2. The price opens and trades higher. The bulls are in control. Phase 3. But before the end of the day, the bears step in and take the price back down to the lower end of the trading range, creating a small body for the day. The long upper wick represents that sellers had started coming in at these levels. A lower open or a red candle the next day reinforces the fact that selling is going on and sellers have now taken control. Basically, pin bar can be traded with or against a trend. They can be very accurate if the formation is obvious and combined with solid support or resistance confirmation. There are two types of pin bar. First, bearish pin bar, and second, bullish pin bar. Criteria to identify valid pin bar patterns. Pin bars, even though they are made up of the same features, long tail and small body, never look the same when they form on the chart. Figuring out whether a candlestick is a valid pin bar or not is a bit tricky. Luckily, there are 4 features a candle must have in order for it to be a valid pin bar. 1. A long tail that sticks out from the surrounding candlesticks. This should be 2 or 3 times the size of the entire candlestick. 2. The tail can either be below the body, in which case it's a bullish pin bar, or above the body, where it's a bearish pin bar. The body should be present towards either the upper or lower extreme of the pin bar. 3. The tail should be at least 3 times the length of the body. 4. The nose should not be very long at all. If the nose is too long, the candlestick will form what is called a doji, which is a candlestick with a small body and equal length wicks on each side. A perfect pin bar will have a very long tail and a very small nose. How to recognize if the pin bar will fail or succeed? In order to be a valid tradable pattern, the pin bar must form near support or resistance levels. This is a key point in trading pin bars. Many rookie traders will trade every pin bar candle they find, leading them to lose a lot of money. Pro traders will trade only valid setups with well-defined rules, which we will define right now. The best pin bar trading strategies you can use. The pin bar is one of the most versatile price patterns in existence. You can use it on its own, as a signal to take profits, combine it with support and resistance levels, trend lines, RSI divergences, overbought and oversold, Fibonacci retracements. And that's just a few of the ways. And now, we'll show you 2 pin bar trading strategies that every trader must know. Strategy number 1. Trading pin bars at support and resistance levels. The first strategy I'm going to be showing you today is how to trade pin bars at support and resistance levels. As some of you probably already know, a pin bar is a price action reversal pattern which forms frequently in the market. It's a pattern which can form either as a result of the bank traders taking some profits off trades they've already got placed, or from getting new trades placed to cause the market to reverse. Most of the time it's not possible to figure out which of the actions is causing the pin to form, but it's not really an issue because they both usually cause a decent-sized reversal to take place. Step 1. Mark the support and resistance levels on your chart. Step 1 in trading pin bars at levels of support and resistance is to mark all the levels you plan on using to watch for entries into trades on your chart. Step 2. Wait for the valid pin bar to form at one of the levels. When the market comes back to one of the levels you've marked, you're going to want to see a valid pin bar form. To avoid trading low probability pins, I suggest you only trade the valid pin bars. Step 3. Enter your trade. For bullish pin bar. First, look for valid bullish pin bar candles near support levels. Second, place a buy stop order at the top of a bullish pin bar candle. Third, place your stop loss below the tail. Fourth, place your initial target at 3 times risk taken. For bearish pin bar. First, look for valid bearish pin bar candles near resistance levels. Second, place a sell stop order at the bottom of the pin bar candle. Third, place your stop loss above the tail. Fourth, place your initial target at 3 times risk taken. Step 4. Taking profits and closing the trade. Exit trade could be done whenever the market makes a new high or low. If you've placed a sell trade based upon seeing a bearish pin bar form at resistance, or after the market makes a new low or high, if you've decided to place a trade after seeing a bullish pin bar form at support. Choosing when to close the trade completely really comes down to whatever your own personal preferences are. I always try to hold my trades open for as long as possible, but I know that a large number of traders like to set targets to close their trades at predetermined points, so really it's up to you to decide when to close your pin bar trades. Here are other examples of trading pin bars at support and resistance levels. Strategy number 2. Trading pin bars at Fibonacci retracement levels. You can also trade pin bars at Fibonacci retracements. You won't get as many trades as trading them at support and resistance levels because retracements don't occur that often. But the trades you do get will have a higher probability of being successful, which still makes it a worthwhile strategy. Trading the pin bar is simply a matter of waiting for the price to hit a retracement level and then seeing if a bullish or bearish pin bar forms. In this example you can see a sharp decline caused the price break through several retracement levels before reversing at the 61.80% level, resulting in a bullish pin bar forming. After the pin appeared the price reversed entirely, rising almost 70 pips in this case. Rising almost 7 times risk taken. Note: only trade bullish pin bars that form at retracements drawn on upswings and bearish pin that form on retracement drawn on a downswings. The following steps will help you identify and trade the pin bars at Fibonacci retracement levels. For bullish pin bar. First, look for a bullish price thrust that clears above the previous swing high with strong momentum. Second, mark out a Fibonacci retracement zone between 50% and 61.8% of the price thrust. Third, after price falls down to the retracement zone, buy above bullish pin bar price action signal when you have a pin bar price action signal present on the chart. For bearish pin bar. First, look for a bearish price thrust that clears below the previous swing low with strong momentum. Second, mark out a retracement zone between 50% and 61.8% of the price thrust. Third, after price rises up to the retracement zone, sell below bearish pin bar price action signal when you have a pin bar price action signal present on the chart. Pin bar detector indicator. The pin bar pattern is one of the most reliable reversal candlestick patterns that traders use. It is a candlestick pattern that signifies price rejections, which can be observed based on the wicks pushing against a certain direction. The pin bar detector indicator is a trading tool developed to help traders identify pin bar patterns more easily. How the pin bar detector indicator works. Pin bar detector is a MetaTrader indicator that tries to detect pin bars and marks them by placing a smiling face symbol below the bullish pin bars and above the bearish pin bars. It is a pure price action indicator, which is not using any standard technical indicators in its code. The configuration of pin bar detection can be done via the indicator's input parameters. Pin bar detector can issue platform alerts and email alerts on detection. The indicator is available both for MT4 and MT5 versions of the trading platform. This should be simple enough. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of pin bar trading to fully understand this wonderful strategy and to make the most out of it. The pin bar is one of the most effective price action strategies you can use in the market. It's easy to spot and trade, making it an effective strategy for beginners and professionals alike. As always, if you learned something new, or if you want more videos more often, make sure you subscribe click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.